never invest the money that you cannot afford losing, or never invest the money that can have an impact on your livelihood. And who I am, my name is Yagub Rahimov. I'm a professional Forex trader and trainer, and I'm the author of the upcoming Forex book called Forex Not for Dummies. And since 2005, I've been trading. Meanwhile, during this process, I have been nominated as the best trader of the year multiple times. And it's my passion to teach people to trade and to have an impact on people's lives. That being said, I would like to ask a question for you now, that what is price action not used for? So how do you not use the price action for? Because everyone seems that they know something about price action, but it appears for me that, well, when you say that it is price action trading, it is price action and so on and so forth, people think that you're just trading candlestick formation, or you're looking for finding pin bars in the chart. I believe that this is not how you use price action. Indeed, the way that you are supposed to be using price action is mostly based on reading the market sentiment. You don't buy at the resistance, or you don't sell at the support. You just need to understand these things. And in this session, we'll be talking about 5 tools, although there are multiple ways of using price actions. And many people would tell you that, no, you should never use the indicators if you are using price action. And I believe it is wrong. And if you are a price action trader, you should be using moving averages. But don't just use moving averages as a blind person. We discussed it in our webinar yesterday as well. There are multiple ways of using moving averages. And one of the things that I highly recommend people who use price action and who use moving averages is to avoid trading when the market is too far from the moving average. And this is why I say so. When you look in the market, in this example, we will be using 20 and 50 and 200 as well as 100 moving average. As an example, in this chart that I have is the Euro USD chart for this week. And you can see that the blue one that we have as a moving average on my chart is the 20 moving average. It's 20-hour moving average, while the red one is the 100 moving average. So if you combine these moving averages, you will see that when the price is moving rapidly, or when the trend is very strong, as an example, this section over here, or this over here, or over here, whenever you see that the market is breaking out, you would see that the price would retrace to the 20 moving average, and from 20 moving average, it would still continue downwards. So this is exactly what I'm trying to explain by saying, do not enter a market when the price is too far from the 20 moving average. As an example, you would not sell the euro dollar from this level because it's pretty much far away of moving average. So therefore, you should be looking for testing of the 20 moving average if the market is trending rapidly. And then you should look for long or short opportunity from there on, depending on the slope of the moving average. Another use of moving average is also, again, using 100 simple moving average. And this is in case when the market is trending, but kind of a weak trend. So when you see that happening, again, wait for the market to retrace to 100 moving average, and from there onwards, you can sell if the trend is overall bearish. If the trend was bullish on this occasion, as an example, you should have been waiting for the trend or the market to touch the 100 moving average, and then you should have been long in the pair. That being said, by the way, today's session is delivered to you by AtoZ Forex and sponsored by ADS Securities London, which is a regulated, FCA-regulated Forex broker, and one of the AtoZ approved brokers as well. So I highly recommend you to go out and check out this broker, and make sure to differentiate between AtoZ Forex approved broker and non-AtoZ Forex approved broker. We'll come to that in a bit again. The second tip that I would like to give you is avoiding 2 months plus ranging market. I know you say whatever, but I like ranging market. Well, the thing is that if you are a scalper, or if you are a person who just uses some strange indicators and just trades, you know, when it hits the resistance to sell and when it hits the support to buy, well, it's good to trade the range, but it's not really price action trading. But if you keep it simple, when a pair ranges for more than 2 months, it won't trade or it won't trend. So this is an example of Euro USD for the last I don't know even how many months. If you really look into this pair, you would see that it has just been trading between 1.05 to 1.1516, and it's pretty wild. And especially if you look over here, you can't really take a grab on this and understand where is the trend on this pair. I do have winning positions on Euro USD, but these are, if you follow me on different channels, you will see that my maximum take profit is 150 pips because I do not really know which direction the euro dollar is going to be taken, since it's just range trading right now. That being said, the third tip that I have for you guys is hunt the intraday corridors. What is a corridor? I'll come back to it in just a second. It's also a kind of a range, but intraday range. So you don't trade the ranges because they are tiny, they are narrow, they don't give you much profit opportunity, but you hunt the range breakouts. Like the day before yesterday, I gave you a range trading analysis based on euro dollar. I said that the market is trading between or within a symmetrical triangle, and I said that the euro dollar is likely to break it above, but meanwhile I did not ignore the possibility on the bearish side. Indeed, we hunted both sides of the market. If I'm not mistaken, we had a euro dollar buy stop at 1.1350 level, and we had a euro dollar sell stop as well at 1.1295. Guess what? 1.1350 didn't trigger, so we didn't lose anything, but we still hunted the bearish side, and so far today we are more than 100 pips in profit on euro dollar thanks to yesterday's FOMC minutes update. So this range breakout works mostly well on hourly time frame, which I use myself pretty much all the time. But if you prefer using 30 minutes or 15 minutes time frame, well, you can use it as well. I know I don't trade these time frames, but many people I know that use so. So this is an example here as well. USD Canadian dollar, you see that it trades within a range. It's kind of like a complete sideways move. And what you do is that you just need to find out a break above or break below these complete resistance levels, and you just follow the market with it. This is just one of the amazing tools that you can use for when it comes to price action. And the tip that I can give you with this thing is that, well, if the market is below the 20 and 100 moving average on a 1 hour time frame, and you have the, let's say, this kind of flag pattern or just sideways pattern occurring, I can tell you that 90% of the time the movement is going to be on the bearish side. So put your bets or put your odds on the bearish side, not on the bullish side for this occasion. The fourth, one of my most favorite tip that I have for you is to use the long candles as a major support and resistance levels. I'll explain you what it really means in just a second on the live chart. But basically, when I say long candles, I don't mean bullish candles. I'm really referring to the size of the candles. If the body and the shadow are majorly bigger than the other candles that you see, these are likely going to appear as the following support and resistance levels. So use these levels to re-enter the market or as your support, stop loss and take profit levels as well. In this chart, which is the New Zealand dollar Japanese yen daily time frame, I have outlined some of the long candles that I have. As an example, you can see over here that this candle, which is marked with a red arrow, is substantially longer than the other candles. So you put just a line on it and look for, it's a horizontal line, and you look for the feature as a point to be tested. So if it is tested in the feature, you know that this is a level that's likely going to be appearing as a strong support or resistance level. Another one over here, and another one over here. This candle right here. So this one as well, is also colliding with the candle that I'm just showing with my mouse right now. So if you look into these long candles, you will understand that these are the candles defining the following support and resistance levels, which is important for you to follow. And yes, by the way, you should be using wicks and bodies together, not just body or not just a wick of the candle. The fifth and very final tip that I have for you guys today is trade with the trend. I know everyone says so. I know you hear it all the time that the trend is your friend and so on. But the thing is that you just don't use the right logic. I know it for 100% fact that you don't use the right logic when you are trading the trend. The logic is when you trade the trend, you go for 100%. But when you trade against the trend, or when you go with the correction, you just go for the 50% of the trend at its best. So this is an example. As an example, when you are, this is, by the way, Aussie dollar. This is 1 hour time frame, and you can see that when you follow the trend, as an example, the first wave that we have over here is 260 pips. But when you go against the trend, it is 70 pips. So if you combine it, it is literally 1/3 of it at its best, probably less. The second wave is 210 pips, and the second correction is 100 pips. It is still less than the 50% of the 210. And the third wave is 150 pips. And one additional tip for you over here is that each time you are into a rally, you will see that there will be 3 trend waves and 3 correction waves. So as an example, for this candle over here, you could have seen a bullish attempt after this, and it would have been a very narrow one, and then probably it would have turned around. I'll give you one final extra hint as well. Try to use Fibonacci. And this is how you can use it as an example. You find out this wave as an example, and you can go bold. Okay, you don't really need to understand my complete Fibonacci strategy, but as an example, you could combine from right to left over here, and you could have gone for 161.8% or 200% of your Fibonacci retracement zone as your following take profit level. I do not refer for you to enter as against the trend, but let's say this is probably 88% Fibonacci retracement zone or 76.3%. And if you would have put your Fibonacci from right to left, this would have been most likely around 188 or 161.8%. So you could have you could have short the pair from 88% Fibonacci to this level, and you wouldn't have to worry about anything. Well, thank you guys very much for your time. It's time for your questions. The question comes from Rustum saying that if our entry is on 1 hour chart, what's the best time frame to check out the trend? Well, let me put it this way. You can do it just on 1 hour time frame, just zoom out. What is the best time frame for intraday trading? I don't trade anything except daily, weekly, and 1 hour time frame. So my answer for you, Imran, would be 1 hour. I don't trade anything less than 1 hour. Another question comes from Suraj, commenting that do you think supply and demand for entry and Fibonacci for exit is good? Well, you could do so, but why not to combine Fibonacci for entry as well? So as I gave an example, you could have shorted in that occasion. Let's actually show you exactly what I'm referring to. Like in this occasion, this is the level over here, 88% probably, or anything that's close to that. And you could have shorted it from it as an entry level. And it's also another price action method that I just told you about. This is the 20-hour moving average, which is, as I told you, the market is likely to touch it and then continue its moving. So you had support resistance 1, you had Fibonacci 2, and you had moving average 3 reasons to short the pair from that level. So you could have used it in such a manner to attract and enter to the best available position that you could. Let's see other questions. We have quite many. If I miss your questions, I'm sorry, but I'm just trying to answer as many of them as possible since we have way too many participants today. How do you spot the trend reversal? Do you use MAs or any other indicators? The question comes from Without Us. Well, just like we discussed yesterday in our moving average webinar as well, you can use number one, of course, your moving averages. It's a very reliable tool, and whenever the price crosses above them and two moving averages cross over each other and their slope has changed, it's a trend reversal confirmation for you. I can't explain it better than this. Hubert is asking, in this webinar you mentioned about a 20-100 moving average, not 50. Well, I use different types of strategies all the time, but for this very specific strategy, which is 100% based on price action, you should be using 20 and 100 on 1 hour time frame. We have another question from Rustum commenting that I mentioned that when you are trading the market on the range breakouts or corridor breakouts, if the price is below the two moving average, you should be aiming for bearish entries. Does this mean that I should completely avoid the long entries? Well, this is not exactly the truth, but in this occasion, as an example, well, I have more than one reason to ignore the bullish completely. For one very obvious fact, we have, as an example, at this level over here, a crossover of two moving average. Then we have a resistance line just over here, which was previous support. We have the MACD below the zero line, and of course my moving average showing down. So we have 1, 2, 3, 4 reasons to go short and no reason to go long. So therefore, there was no reason for me to even consider a long position in this occasion. We have another question coming from Gopi, and the question is, how do you use Fibonacci when you are into a range market like in Eurodollar? This is the example over here. Well, if you participate on my Fibonacci retracement zones that I quite often talk about, I use Fibonacci waves. That's how you can trade it, but today's session is not about Fibonacci, unfortunately. One last question that we will accept for today is, could I add extra on my position during the breakout? Of course you can. Like, let's give an example over here. This is one example. We have a price action confirmation, we have a lower high, and we have another lower low over here. The market confirmed that the market is entering into a bearish session. You short over here, you see the pair is finding another support, and you know that we have all the indicators showing that we are into bearish mode. And you see the second it finds another resistance over here, you again short again, and you add on to it as much as you can. This continues on and on as long as you are into a complete trending market.